Good morning and welcome to VSA Capital 5 Minute Morning Miner. It is Wednesday, the 2nd of February. Hopefully, none of you have got too big a hangover from the Chinese New Year celebrations that you probably weren't doing last night. But one or two of us at VSA Capital were, not myself, though. What about you, Ollie? Were you having any?
I wasn't. I think Peter Matson was out in Chinatown, though.
It was probably pretty vibrant if you were in Chinatown itself. So, anyway, there we go. The markets continue. At least we seem to have settled down a bit since that pretty horrific January. The VIX index has come back down to a more sensible level, about 22 today. Although I prefer it when it's nearer to 10. So what news have we got this morning in the mining sector, Roddy?
Well, a relatively quiet morning. There's a couple of things out in Canada, but London's relatively limited news. So I suppose that the key announcement is from Petra Diamonds. They've managed to renegotiate their debt facility from a 3-year to a 4-year billion rand facility with a single lender, with a slightly lower interest rate, down from sort of 5 to 4 plus the local bank rate. They've obviously coming out of a pretty tough period of restructuring, but their earnings are starting to look a bit stronger. At the H1 revenue figure that they announced earlier this month, I think was up sort of 49% to $264 million. So in the context of that billion rand loan, I think billion rand is about 60 million US, something like that. And the highest covenant to start with is net debt to EBITDA of about 4 times, dropping to 3 times over the term of the loan. But clearly, with that kind of top line improvement, you would think that that's going to start to feed down to stronger earnings. But I don't know, Andrew, do you think, companies that go through such a big restructuring, do they tend to bounce back?
Look, I think it's had a really serious restructuring. You tend to get the bounce back on the initial restructuring, and this is sort of what I describe as latter part restructuring. So you probably had the bounce back, and then it comes down to, is it fundamentally good business? I wouldn't expect to be seeing fireworks right at the moment. Paul obviously is very bullish on diamond prices, but diamonds as a sector has always been a very difficult sector for investors to really, number one, get their heads around, but also actually to make money in. You've got to be much more of a trader, and the people playing in diamonds, it's quite what I describe as close-knit little group. So yeah, it's a tough space to make money in. I mean, we look at it and we obviously see the odd special situation, but it is all about special situations and understanding, what is taking your share price effectively from A to B, and not really worrying too much about the underlying commodity price. I think that's how I would sum it up.
Yeah, I wouldn't disagree with Paul's top pick, Lucara, which has been fantastic, and that's a really good business. It worked very well run, I think, regardless of the commodity it's in.
Yeah, again, I mean, I think it's one of the problems we struggle with over in the UK of junior miners, is that we don't have actually the best junior miners really in general on the UK market. Places like the TSX and the ASX tend to be much stronger in those areas. We're very good up at the FTSE, with the big companies. We're pretty good at what I describe as the early stage exploration, which is very retail dominated. But that lovely sort of section in the middle of a junior that's maybe just got some production but not really ramped up, it's sort of the sort of 50 to 500 million market cap. That's why we're actively encouraging TSX companies to dual list on the Aquis Exchange in London, to give London investors the opportunity to get exposure to that part of the market, because in the current geopolitical and current economic environment, mining looks like, believe it or not, a safe haven.
Yeah. Well, speaking of that sort of segment of the market, some pretty impressive drill results out from tin producer Alphamin, which obviously off the back of the rally in the tin price, they've upped their exploration program and have turned out some quite unbelievable assays, 16 meters at 5% tin from 290 meters, 9% at 5.63, 19.6 meters at 17% tin. I mean, these are, I think someone converted it into copper equivalent, and it's something just extraordinary, like 10%.
The problem is the location of the mine, isn't it?
Well, yeah, that is the problem at the moment. We talked about DRC discount yesterday, so there's a heavy risk premium, but the stock is, up strongly over the last year. It's now at the highest level since 2006. I don't quite know how far back the company goes in this format.
It still is, though, probably one of the cheapest mining stocks in the world, isn't it?
Yeah, absolutely. And they had record production levels at the end of last year, so their earnings are going to be super normal profits. And I think the key thing from this drilling is that the two ore bodies are now just 85 meters apart. So this is looking like one single project now.
I mean, it is. It's a phenomenal project. You just have to get your head around the DRC. It's also one heavily supported by, we were commenting yesterday, Mark Thompson, and he is, for want of a better word, the king of tin, and he's obviously also very active in the tin markets down in Cornwall. He is a man that is definitely well worth following. I'm not saying he always gets it right, but the cards are on your side, should we say, stacked on your side, whatever the phrase is, you know what I mean. Anyway, we believe he's worth following.
Certainly do. And then the last bit of news is a new company. I don't think we've talked about them before, Kingfisher Metals. I met them at 1-to-1 in London. They just had their first assay released just in time for the conference, and this is the second batch of assays which have proven their discovery on the maiden drill program for their Cloud Drifter project in British Columbia. So the first set of assays a few months ago, 9 meters at 7 grams a ton gold, 14 grams silver, and 0.28% copper. That was pretty deep, 427 meters, but this time round, 2 meters at 37 grams a ton gold, 20 grams a ton silver, and 0.16% copper, with a meter at 73 grams gold, and that's from about 68 meters, so much shallower. And if you look through the full release, you'll see a whole host of intercepts from about 15 meters right the way down to sort of 200, 250 meters, all relatively short intercepts like that. But for a second set of assays in the first drill program, 20 million market cap is not a post-discovery valuation in my view.
There you go, another cheap stock. Very good, Ollie. That'll do for today, I think. Let's speak again tomorrow.
Well, Paul should be back, so I think we'll be back on next week.
Okay, that's fine. If Paul's back, I'll be speaking with Paul. You never know with Paul, then.
Okay, cheers.